Hi everyone, welcome to Market Kickoff.
Hi everyone.
Whoops, got the audio showing all over the place. Don't want to give ourselves
Whoops.
All right, so we had a long weekend and a lot of people were trading round and about all over the place and other spaces, but we here on TopstepX just getting ready to get the day started. We're going to start with the ES, but first I want to talk to you just for a minute about the things that I do spend time with the Hive, and that is the performance group in the VIP program. Hopefully those of you that are really looking to make a difference are going to be getting ready for that next season where you might be able to be chosen. I'd love to see more of us inside of a good training program. And so I wanted to talk about Topstep as an instrument of trading. You know, a lot of folks talk about the prop space being a little bit of a cycle. And I heard the other day, I was reading on X, which is, Twitter can be quite the cesspool, but someone made a very unfortunate rhythm about, what people do in taking up prop firms. It was very, very negative. And so I feel like my thought tonight should be a couple of things. One, when you look at the opportunities with Topstep, one of the first things that really, it's bothering me that my face is not centered, so I'm a little bit anal retentive there. One of the things that we have to realize is that because there's no barrier to entry, it means anyone can step into the game. But see, that's a privilege. And so once you step into the space where you realize, hey, my opportunity with Topstep is really a privilege, then the question becomes, how do I make the most of that? And many of us in the space here, we've gone to college and we've spent tens of thousands, some of us have spent hundreds of thousands on our college education, and we get all kinds of classes where we have no clue whether it's going to really help us out in life-changing ways. And Topstep does. What a lot of us have a tendency to do, though, is jump in and go, oh, this is just a vehicle for me to make money. Yes, it absolutely is. But here's the thing. There's no barrier to entry. And so if you jump in and you go, hey, I want to make some money, the question then becomes, well, what skills do you possess to actually make that money? And because it's hard for each of us to look in the mirror and go, wow, I'm deficient here and I need to work on this, I need to change, we don't do that. And then what we realize is that in order for change to occur, changes have to be made. And so as we start this new week, I want really each of us to look at what we did last week and say, okay, there's what I did last week. How different was it to the week before? How different was it to 2 weeks before? And then how different is this coming week going to be? See, if you don't set benchmarks for yourself, you're going to run on an infinite treadmill. And you're going to end up in a space where all the classes that you can get at Topstep for as little as $49 a month, all of those are going to be in vain, right? Many of us don't use this vehicle to train up our skills. And our skills are going to have to be trained up in both process and technique, And also execution and mindset. And execution and mindset are very, very close to each other because we can see what we need to do. But if we don't have the mindset to execute, we simply are going to sit on that treadmill and go round and round and round. And at the end of the opportunity, you're going to look up and it's going to be wasted time. And so my question to you is, how long you want to do that for? All right? And if you want to change, start changing a little bit, one incremental thing at a time. Choose one thing to do better next week than you did last week. Maybe it's not being impulsive. Maybe it's reviewing the trade one more time before you take it. Maybe it's reviewing the trade after you took it, because it's reps on the field that make you good for the game. And it's only when you're in the game that the results are going to really matter. So that's me, my soapbox, really very keen on watching people advance. But I also know this, a lot of us stay in the same spot because we choose it. And we don't actively choose it, we just choose not to do anything different. So, as they say, buckle up, buttercup. Here comes the next week. So let's just jump into the ES. I hope that wasn't too fierce for some of us, but if it is, my goal is to give you ideas that will allow you to impart change. None of us at Topstep can make you do anything. You have to decide how your life's going to progress. And if you're sitting here in Topstep and you can see folks making money consistently and coaches coming in and showing you clear methodologies to move forward, then it's at the end of the day up to you, right? It's all up to you. Taking responsibility for where you end up next is going to be the most beautiful thing you'll ever do. And you'll be able to hold your head high no matter what, because you took responsibility to do the job at hand. Doesn't mean mistakes won't happen. Doesn't mean that you won't lose, but it does mean you're on the road to mastery, not on a treadmill. All right, so let's take a look at the ES. We're going to look at Friday's motion, right? We had a holiday today. Price act, it does trade. Notice this small candlestick formation shows that it did trade. And Friday's motion was a pretty big selling candlestick that came after a brand new high. So what this means is traders who took it higher could not keep it higher. And so the line in the sand is going to be settlement of Friday. And that number, because we've got our Topstep levels up and running, thanks to the team in the background, is rounded about 6,400 and what is that, 72? That should be a line that you mark for yourself. All right. Monday's trading, very shallow volume, told us that the traders are trying to get up and stay above the zone, but at the close of today's trading, before tonight's trading begins, shows that we are still under the open of the high volume candlestick from Thursday. So that is a battleground. I would mark that battleground and say, all right, we've got a fight club between our 72 and 84. That's a lot of space, right? Okay, let's look at the 4-hour. Got a few minutes before the market opens, and so my boxes here actually show 30-minute high volume areas. Here's the thing about looking at volume areas. You can look at volume areas as little as 5-minute candlesticks. The question is, are you trading on very tight cycles? If so, that 5-minute candlestick will help you in all kinds of ways. If you are not, then it's going to give you a false signal. So when you set up a trade, you really want to know, what do I hope to accomplish? What is my risk? And where's the appropriate entry? And then being patient on it, right? You wait for price action to come to you so that your risk is minimized. Now, there's a 4-hour candlestick on Friday, that 10 o'clock to 2 p.m. candlestick, gives us a high of this 6,484. You can see the traders came into the area and faded, came into the area and faded, came into the area and faded, and now we could very well be coming into the area again. What makes this a little bit tricky is that we're making higher lows. So what are they likely to do? They're likely to go from one area of resistance to the next area of potential resistance that we can see. So we're going to collapse into the 30-minute. I've got my shaded boxes here. We've got the top step levels up. We can see that this formation, every time I come in here, people go, what are your indicators? All right, so I don't have the plot for the 14 in here, just leaving it out for now. But I have the 63, that's the pink one, and I have the 200. And we can see that that 63 is sloping down and the 200 is flat. We have a bottoming formation, and we have price action that's really trying to break to the north. Everybody's talking about seasonality. September, going to be a tough month. I think a lot of people are loading onto the side of the boat that is going to tip the balance, because I don't normally hear about seasonality this much. And so deep fades still going to bring us pretty hefty buy zones. So as we come into this opening area, my suspicion is that the buy stop
Order
above
rejected.
Oh, it won't let me do it until the market opens. Okay, so my buy stop is going to be above this area into the next resistance zone. But I do want to see what price action is going to do in the early part of the morning. It's very, very important to notice that we have a cross current. We're above the VWAP. We're above settlement. We're below both of the bigger moving averages. And so there's a cross current. It tells us that there are big spikes that could fade and big dips that are likely to be bought. Very, very sideways. Okay, let's go to the NQ. By the way, how many of us trade the YM, just out of curiosity? I just want to know that. Whether we spend time there or not, that's pretty helpful to me. Okay, so here we are taking a look at the NQ. Let's go to the daily. Big selling candle on Friday. The candle today has the same problem, the inability to get above the open of Thursday. And as a matter of fact, it ticked just above it and sold down. Traders trying to hold the floor of this big move. And you can see from a daily perspective, that top of this candlestick formation here and the bottom of the candlestick formation from August the 20th is also telling us they are trying to hold this upper region as support. Okay, the settlement is 23,463 or so. And so that is what I am looking for in terms of dip buying. It seems to me that dips are buys, spikes are sells. And that is all I am seeing at this juncture. It's very undefined in terms of what price action is going to do. You can see that we had a
The
big
market is open.
candlestick formation here at 10 o'clock. That 4-hour candlestick, same one everybody's battling. The traders are going to try to push it up here. Point of control sitting at 23,546. We'll start staring that down in just a little minute. But what we can see right now is that we are above the VWAP. However, we are trying to hold this framework here that gives us 30-minute candlesticks have been holding, and this happens to be Friday's high volume closing candlestick, and we are drifting inside of that zone, so that halfway spot is likely where support action should sit, right? So if you're staring something down and you say, hey, I think I might like that as a support zone, notice these wicks here that are going to define your risk. But my suspicion is that this candlestick, the last one of import, let's see, I'm going to make that background just a wee bit stronger so that you can see that we are inside of that framework. All right, so downward 63, momentum is up. You can see that with the higher lows. So it's a little bit sideways. They're going to chop around and see what they do. All right, let's look at the YM. We'll go very quickly. If we take a stare down at the YM, we can see that, you know, they're trying to buy the bottoms. You see these wicks? What do the wicks tell us? The wicks tell us that if people come in on the low, they are getting bought up, but the wicks are pretty deep. And so we've got a cross current here, bullish momentum. That's our MACD right here. And we've got selling pressure above, giving us lower highs, buying pressure underneath, giving us higher lows. So the traders are really in a fight to see if we can hold ourselves up over this level. If we collapse into the 30-minute, what we'll notice is that the closing candle, and that's this box right here, is the same one all of the indices that we have been looking at are battling through, right? This one is falling inside. This is kind of what we expect, right? We expect it to collapse inside of this zone because we have a cross current of motion, right? The traders came in, they said, hey, let's buy this. It comes down to the bottom. It bounces, moves above the top, comes back down to the bottom, bounces. So we can tell that they are trying to build a volume shelf in here. If it were me and I was looking at the YM, my thought would be, you know what? I would like to take a buy right down here in this zone, and I'll put my stop right here. So I've got about 40 points of risk sitting in that area, but this is exactly what I think. I'm going to look at the recent past, stare down the volume events and go, you know what? If they come down into this zone, I want to get filled, but I don't want to risk it. So I'm going to wait to see if it comes down, gets a little choppy. Tonight, when Dakota comes on, there'll be a lot more action and you'll be able to see a little bit more about what this price is doing. All right, I am very happy about this Bitcoin move because I have been calling this short for more than a hot minute. This is just liquidation. So how do you tell a chart is in liquidation after it's been moving up very nicely? Well, a couple of things you can see. You can go, oh, that's a double top. The big thing to look at is look at the biggest volume event and draw a candlestick around it, draw a box around it, and go, okay, what is actually happening here? If I move here in this candlestick and I want to go long, and a lot of other people move in, and they make a decision, how price action behaves after all that volume piles in is going to tell you the tale. And notice, they try to recover. They do. They try to recover, but at the end of the day, they cannot hold above the close of that candlestick formation. And so this gives us a clear line in the sand of resistance around 119,000. Now, where are they going? Well, as we start here, we see a gap down, right? We continue to have liquidation events here. Listen, folks, this is very important to watch. Bitcoin is a very clear example of an instrument that flourishes under risk-on events and tends to pull back when we have risk-off events, meaning people start pulling their money out of the market. They're going to pull their money out of an instrument that's got a lot of volatility attached to it. My suspicion is the next thing it comes to is 107,000. Because I cannot see, because this instrument is only covering the U contract, I have to look at price action that expands wider from a daily formation and look for high volume candlesticks that are in the running. And so the one that I see is this area. That's the first edge. That's 106,200. And then, okay, that's too far away, is it? Yeah. Up above 110,000, you might be able to get along. Underneath 106,000, it's very likely to move back into these old heavy congestion zones around 103. All the way down to the June 23rd candlestick of 102,500 and 101,335. Bounces continue to be sell zones in Bitcoin. If you buy Bitcoin here, you need to have it be a scalp trade. This is not a good trade to look at for long-term buying unless you're going to sit on it for quite a period of time, right? It's got some really big selling volume candles sitting underneath them. We're gapping down into a space where, yes, once it gets here, traders are going to try and buy it, but they're only going to be able to buy it into that resistance zone at around 109 to 110,000. I'd be very, very careful going long Bitcoin at this juncture. Let's take a look at crude. Right, so a lot going on in crude right now. Volume is declining. Got a lot of noise here on the daily. I know a lot of people that trade intraday go, why do I care about what's happening on the daily? Here's the thing. If you don't know where big money is positioned, you're going to have a rough time of it. It might not be all the time and in huge measure, but you're going to have a rough time at it over the long haul. You simply have to know where big money is positioning, and this candlestick right here on the 23rd of June, also a very, very big selling candle, really tells us a lot of traders got positioned in here. and they're not doing a very good job holding on to the frameworks. That being said, if per happenstance we can get up above 65, there's a lot more rotation there. Are the traders trying to lift the floor? Absolutely they are. Dips or buy zones here, no doubt about it, right? What is this number? I always forget this one. Oops, nope, hang on. Last week's low, right? This is last week's low, really working on holding last week's low into these higher zones, but the candlesticks are retracing each other over and over again. Let's collapse to the 30-minute. And here's what we can see. We know what the great big shading is. We saw that. It's on the daily candle formation. Here it is opening. Here's the open. It's gapping down, but traders are trying to buy this edge. And so what is this edge? This edge here is Thursday's candlestick formation that's breaking out with the high volume around the close of the instrument, right? Closes at 2 Eastern, 2:30 Eastern, something like that. And so the traders are trying to hold that edge and dancing around. But what can we see? We have a high that gets sold, a higher high that gets sold, another higher high, just by a couple of ticks, but they're all getting sold. Momentum continues to drift. So in my mind, the traders are looking for the floor of support. To me, if we stare down Friday's candlestick, closing candlestick formation, we can see that we've got high area at 64.12 and a low area at the point of control. So if I were a betting man, I would say that the bounces are going to be grinding motions back into these higher volume areas. Notice in today's trading at 5 a.m., we had this candlestick form. Pretty good size, right? Big wick. You can see the traders are selling the top of it and trying to buy the bottom of it. That's where they bounced, right there. If they stay in that zone, super. But the failed retest of that region is very likely to give us more selling volume. It's very likely to give us more selling volume and send us into the lower regions. Right now, they're trying to hold it. So if I were staring at this, I would say, all right, I believe that there is a pretty nice short sitting up here at 64.82 with a buy stop at 64.90, right? That would be the trade that I would put on there. Okay, taking a look at gold. Someone said, hey, they're short. We can't short until the market opens. We can't go long until the market opens. Let's talk about what's going on with gold. Now, on Friday, I thought to myself, hey, this 3,500 area, if we get up here and we immediately reject it, we're going to have a short. What does it do? It came in, tested 3,505 or so, and then just had the most savage bounce. And now we are approaching the all-time highs. Now stare this down. See this big patch? This is an inventory accumulation event. They've been accumulating since the low of around 3,290, 3,320, kind of a big deal, right? Great big selling candle right here at the top of this wick. So from a daily perspective, people who came in short that thought price action would break further to the south are now sweating a little bit. And so if this holds much longer, if they haven't already done it, they are going to have to buy to get out of this trade, and that's going to give us 3,600 to the upside. So in my mind, from a daily perspective, gold is very bullish. Now, does that mean it won't fade? Of course not. Anything can happen, right? So what is the price action doing? Let's take a look at motion. We've got a big volume candlestick right here. That's the one from, what is that? Friday? Yeah. We can make that one just a wee bit brighter, right? So you can see that it's there. The high being 3,519, 3,520. That's old resistance. Could easily be new support. Settlement is just underneath it at 3,515 or so, right? Now, what are they doing? They're building inventory in this zone, building lots of inventory. They're not losing the bottom, and they're not staying above the top. And the biggest volume candlestick of that formation is giving us a new high of 35.43. Look at the location of the line of the MACD. It's positive. So that tells us that dips are buys in this space. So if it were me, I would be staring this down thinking, okay, where are the buyers coming in and taking control of this space? Could we have an exhaustion move to the north? Yes. What does an exhaustion move look like? It moves way up, big volume, and then the follow-up candlestick cannot come near it. That's what exhaustion looks like. So far, we don't have anything like that. Nothing like it at all. If you like looking at formations and saying, hey, I just want to short this right here at, 35.50 or whatever the number is, 35.51, you can, but I mean, there's not a whole lot telling you that you should. So what might that look like if we stare this down and we go, how do I take information about what the market is giving me to position myself to move in the direction of strength? See, that's all you care about, because you can't push the market. You can't, right? One, these are accounts that are in sim mode, so you have no control over it. And if you are trading live, you probably don't have the volume to move the market. So what does this look like? Big 5-minute candlestick formation. Do you see it right here? You can trade. Look at it, a 5-minute, right? Big opening volume. We've held the low. We have another follow-up candle that is moving ahead. And so what this tells us, twofold. One, we probably are headed to 3,557 in the near term. But we've got a 200 moving average that's up. We have a 63 moving average that's up. We have a VWAP that's up. And we have a momentum indicator that's up. So if you're saying to yourself, hey, I want to short gold, you're running against every piece of information that tells you that's likely. Now, somebody might say, yeah, but those are lagging indicators. Indeed, but they are indicators, and we do use them to help guide us through the market space. So let's go backwards and see what happens with these topping formations when we have a volume price action event, right? So here is tiny motion. right? It's been running up the flagpole, right? Higher lows every single time. The moving averages are all up. We're just far away from them. And then we have a spike up. It gives us another high, closes at or near the close of the other candlestick, and then the next candle retraces that entire move. The first thing to look at here is, one, where's the next line in the sand? That's got a lot of volume, right? Now, actually, it's all the way over here. But let's look in the near term because you're looking for only 5 or 6 ticks or 5 or 6 points or whatever you're looking for. You're going to see to the left, this candlestick formation right down here is carrying the highest volume event. And so you're going to look at that and you go, okay, let me look at the top. If I lose that area, I am very likely going to go to the bottom of that candlestick. And wouldn't you know it, we absolutely do. And not only that, when it loses it and bounces, it also stops right there. And notice how important that line in the sand is over time. That 3,548 area, a big deal right now. It truly is. And so I want to put a little bit of 48. Yeah, I want to put something right there for us to have a peek at what price action is going to do. Well, we can see from here, it's getting a little toppy. If you decide you want to take the short, what is the broad market telling you? The broad market is actually telling me that I can take a buy here if it comes down to that zone. Okay, so we'll leave it. We'll let it run. I better put my stop in here because I don't want anything tragic to happen to this account. Let's do it here. 45. Okay, now let's look at the questions. Can you go over how and why you marked those boxes? I would love to, Mark. Okay, and then somebody says when the NQ and YM are moving in the same direction, you get a nice move in the ES. Here's the thing. If all of these guys are moving in the same direction, you always get a nice move. It's when you have dissonance that you have to think more about trend and your frontline support. Okay, so here's how I do the boxes. Let's go to a copy here, and let's do it. Mark, what instrument would you like me to map out for you? What instrument would you like for me to trade? Of course I'll show my volume profile setup. Of course. Let's go. ES. All right. Well, let's do the ES. Okay. And what we happen to be looking at, I'm going to erase all the drawings, right? Nice and clean. Let me show you the setups for my volume profile. This is volume profile visible range. Different to a volume profile. The volume profile just does a specific range. This one does however many days I have. And so what I like to do, I like to have a minimum of 3 days. But when we've been gone a long time, this is Monday, Friday, Thursday, Wednesday, Tuesday, Monday. Okay. I'm going to go for Monday. So it has 5 days, right? This determines what this profile looks like. You can see that the traders are really caught between 6,500 and 6,460. That's also where the gamma lines are sitting, interestingly enough. But here's my row layout. I've got row size of 200. I have my volume of, I have delta measuring the moves, right? And I have my value area at 70. So that's what that looks like. Now, how do I frame out these boxes? So first things first, I want to tell you why I do. And I really want to give a hat tip to Coach Jack. That's John's dad, John Doherty's dad. I posed a question to him, and he gave me a very simple answer that required some work on my time for me to go study. And so a lot of people wonder if, you get to a point in the market where you know exactly what you're doing all the time. And the answer is, I don't know anybody like that. All the people that I know that are high performers, we are always studying, always looking at whatever new beauty the market has to show us. And so Coach Jack said to me, hey, price is going to go where the volume is. And so I thought to myself, if you've heard me before, I thought to myself, I don't know if I believe him. And so that sent me on an excursion to say, hey, if that's true, what will I be able to glean from price relative to volume? And here's what I discovered. Traders will move from one area of high volume to another. Okay, so watch what I mean here. What I do is I use this tool, and let me see if I can show you what that tool is. This tool is called date and price range, right? Now you could just do price range and it would work just as well, right? Let's use price range for here. What I'm going to do is I'm going to go back 3 days, maybe 4 if price has moved a lot, right? If price has moved a lot, I might need to use more days. But what I'm going to measure is I'm going to go to the very big volume bars and I'm going to track them. And so here's my first volume bar. It occurred on August the 26th, and it was the last 30 minutes of the trading day. And interestingly, it also carried the biggest volume of the entire trading day, which is not normal. The first 30 minutes are usually the biggest, but not usually the last. We're seeing a lot of 30-minute movement. So notice this. Here's one volume event, all right? And then the next volume event is the first 30 minutes of the day. You can see it's inside this volume pocket. That happens. If the big volume comes in here, the buyers are going to hold steady at the base of those edges, and the sellers are going to hold steady. If they think it's going to break down, the buyers are going to hold steady if they think it's going to break out, okay? And so things happen with a measured move. I could talk about that some other time, but that's how you draw these boxes. And so the next big one is this box. So have a look. High volume, right? Here they move. Here they break out, fall back in. If they fall back in, the thought process is they will go from the top of the box to the bottom of the box. And if they go from the bottom of the box of one high volume area, they'll naturally walk into the bottom of the other box. You might be saying, yeah, Emery, but look at all of that. I mean, I could have had XYZ points. I could have had 25 more points if I'd held on to that and moved lower. So, yeah, absolutely, you sure could have. And if we stare down this volume box, which is the first 30 minutes of the trading day, you're going to notice the following. Right? Here's the first 30 minutes. Come on, Sally. Operator error here. this one. Right here. Where is it? Gotcha. Well, that took forever. All right, so here's the bottom of this candlestick, right? Notice.
Order filled.
Ooh, I just had an order fill. We went from top of this box, we created a new box. What does this tell us? Hey, big volume here. Sellers want to force it back down. Buyers want to hold it into the next area, and they're going to measure the volume again. That happens at the end of the day. All the buyers are like, ooh, I got it. It's great. I might take a little profit, but what I do know is if it comes down to that bottom of that value area where that big volume event was, I'm getting in. Look what happened to price. It moved from this area, created a brand new volume event, broke out, came back in, walked down from this box to the top of this box. And if you do that every day and you map out where the big volume has positioned, you are going to see the natural pathways of where price is going to try to move into a position. Right? So let's see where we got filled. Nope. Could it be oil? Nope. Is it? Nope. So it must be gold? Yes. All right. So this is a buy, right? So it's going to sit up here, and I've given it a little bit of room. I've given it the bottom of congestion, and I expect it to go, I don't know. I expect it to go, at the very least, I expect it to go up here, right? 53. Okay. So, oh yes. I see one bar between those huge wicks both ways. Okay, so the question is, and here's the thing. I can draw these boxes out all day. I can tell you what I see volume doing. But until you go out and map it for yourself and actually believe that you can find information that allows you to trade strategically in a position, you're going to go, I hate that. I don't want to do that. Right? It doesn't matter that there are wicks or candlesticks in between whatever the prices are doing. All I care about is the mapping out of big volume. And when I map out the big volume, it gives me the roadmap. It doesn't tell me, hey, they're going to immediately turn around and buy it here. Because what does big money do? Big money will force liquidation, trap shorts, and then turn around and buy the market right back up. Okay? In my mind, that is what this is happening. That's what happened here on Friday. Right? Big money said, hey, let's force this liquidation. They can only force it so far. They're going to force it into the next box, right? Where that volume is sitting. If you're staring this down, yeah, we got that one. Yeah, so you're looking at that, but it's only a broad reference space. Now you have to take your own process and your own strategy. Maybe your strategy is, hey, I I like buying above the VWAP. Well, if you like buying above the VWAP, that's fine and dandy as long as the volume formations are telling you that's an appropriate thing to do. Because if you have volume weighing against you, you're going to have a headwind. It's going to be in your face. And what isolating the volume does is put a tailwind at your back, forcing you in the right direction. Okay. What do we want to do? Oh, pleasant evening to you also. Pleasant evening to you. Okay. So you think we should go back down to 64.70. I am not inclined to disagree. I'm not. However, let's talk about this. Let's say, hey, I think it's going down to 64.70. That's great coffee talk. The question is, how do I build a position that will allow me to participate doing this? Do I short it here? 64.77? Where's my stop? My stop is literally the top of the volume box here. Now, it could be a lot less than that, but this is the framework that tells you those traders are working in. It's right around this zone. So if you say, okay, I'll do that, but I've got a sideways VWAP and I have positive momentum, how are you going to trade that? The question is never, listen, how many of us sit down and we go, you know what, the market's going to do this? All the time. We can do that all day long. We absolutely can. Can we trade it and make a profit? That's the storyboard. So how do you turn the concept of, hey, I think this is going to go here. How can you turn that into an actual trade that ends up limiting your risk and maximizing your reward? Because again, like I mentioned when we first started, the goal here with your Topstep account is to learn how to trade real money. And the only way you can do that is by being very focused and really working on your process. It's sort of the same thing, forgive the sports analogy. It takes a lot of hurdles to overcome being a major league pitcher. You can't just go, I want to be a major league pitcher, like you can go, I want to be a trader. You're going to get your neck stomped on in both faces if you try to do something that you do not have the appropriate skills built for. So, listen, I like that number, 64.70. I do. But the question is, how do I turn that into a trade? And it's all about setting up your risk. If you believe that it is going there, the first thing that you're going to have to stare down is, what was the price action of the largest high volume candlestick in the last day or so, right? This is all of today's, and it was on very little volume. So the big volume is going to start to come in again, and they're all on top of this area. And so if you're looking at short action and you go, hey, I'm going to short it here, your stop easily has got to be up over this marker, right? Where all of this heavy congestion is. And if you go, okay, well, that's 8 points away. Do I want 8 points of risk here when I only have 7.5 points into my target. And then you start to squeeze it out and then realize that the waiting is going to what's going to pay you, right? That waiting event is the thing that's going to pay you. So you wait for the entry that gives you the least amount of risk and the highest opportunity for reward. And that's what you would go through. Well, thank you, Super Chris. I appreciate it. Price action has been very difficult lately. It's been volatile. It has had a lot of retracing, right? But at the end of the day, when we say, price action's been tough, it usually means I'm having a hard time making what I think I ought to be making in the market, or I feel like I'm rushing my trades, or I feel like I never know which way the market's going to go. And I have to tell you this, it's a lot better to do nothing than to do something and then wrap yourself around the axle over it, right? Wrapping yourself around the axle is never a good thing. Never, ever a good thing. So that's super important. Realize that you don't have to trade every moment. What you're looking for is opportunity, and what you're trying to do is build a skill and learn a process that you can repeat over and over and over again, that you can take and use in future events to make money. Could this be your only vehicle for making money in terms of whatever you're doing? Yes. Well, then how about using it the way it's supposed to be used, right? This is learning. So what you're learning is to build a repeatable process that over 1,000 trades, you've got yourself an expected positive outcome. And so what I tend to see is traders just slinging out all kinds of trades, getting to an XFA, and then blowing it out because they haven't learned a repeatable process. They just kind of got lucky. And nobody wants, here's a fact. I forget what this thing is called, but there's a name for it in psychology. We all have a tendency to overestimate our abilities. And when things go well for us, we attribute it to skill and not luck. When things go badly for us, we attribute it to luck and not lack of skill. And so this is our humanity, right? I mean, who wants to get up and go, wow, you got a lot of stuff to work on, right? The person that gets up and says, hey, you got a lot of stuff to work on, and looks at it as opportunity, is going to be the one that's sitting at the front of the pack rather than the one at the rear of the pack. All right? So, any... Kook, you're so funny. Yeah, it is supply and demand. It is all supply and demand because the markets... Listen, the markets only facilitate trade. That's all they do. And here's the thing. You could say, listen, it's going to 64.70 tonight. And absolutely, 100%, it could fall right down into that area and you could get your trade. But the question is, if I had to position that trade over 1,000 different times, where would my risk be? Where would my reward be? And what would the outcome be? Right? We don't know. So we look for repeatability. And what gives us repeatability is staring down how big money is moving. The only way we can surf that wave is by watching big money. And you can see they are really trying to defend this zone. They are desperately trying to defend it because every time they've broken into it, it has collapsed, right? Breaking out of it, came back down, gave it a little bit, breaking out of it, came back down, gave up a little bit. So easily it's a mishmash where you could have a great trade taking the short. But how repeatable is it? That's the question. And can you build on that repeatability? So, Philippe. Hi, Emery. I've heard you previously talking about Supertrend. Do you use it? I put up Supertrend because a lot of people like to use indicators that help them along the way. Me, I try to go with as little as possible, but we'll pop it up here. This will be our chit chat. We'll pop it up here and you can see I have a different one. Listen, the standard is 10 and 3. Okay? 10 and 3. So if we stare down Supertrend right now, and I use a stair step form. So here's how it looks. When I go to style, I use this one, right? It is step line with diamonds. Okay? And so if you want to look at the price line on that, it'll tell you where the trend currently sitting for support or resistance. So currently, Supertrend is telling us that this is downward formation with, wouldn't you know it, a likely edge near this 6470. That looks, I mean, it's right there at the POC. So point of control. This yellow line right here. So it's very nearby. So the question is, how does one use a super trend? So for me, the super trend essentially is telling me the same story that the 30 simple moving average is telling me. So let me add an indicator and describe to you why it is I say that. So let me go here. Okay. Let me put this one in as 30. I'll go over here. I'll make that plot just a little stronger and a little thicker so you can see what's going on. I won't put the smoothed one on. And I will hide the others, right? Okay, so now we've got the VWAP. I'll take the VWAP off. I'll hide that, right? And all we're looking at here is the 30 on the 30-minute chart, right? And what it's doing is stair-stepping down the trend of the formation, right? Now it's gotten a little sideways. You can see it looks a lot like the 30. But what it's telling you is, if you're short, this is what's happening to your stop. So the super trend can help you put a trailing stop on as you move into a position. And so you can see the last trailing stop event for this one was at the price point of 6,482, and that would have stopped you out of the short that began right around here, right? It goes from a long, then it stops you out right here, and then the short takes over. So in essence, you could really use a super trend and go, all right, as long as it breaks my support level, I'm going to go short. When it breaks my resistance level, I'm going to go long. Or if I'm long and it breaks my support level, I'm out and I can now take a short. And if I'm short and it breaks my resistance level, I know I'm out of the trade, right? And so this is very sloppy price action. Super trend is fine and dandy. My goal with traders is to have them focus on price first and let the indicators sort of confirm what it is you're staring down. If you look at price first, you get all the information that you need. For instance, here is this 30-minute candlestick at 9:30 this morning. Great big wick to the upside. And then what happens? It comes down. It opens almost right where it closes. And the traders close that candlestick above the high of the opening 30 minutes. What does that tell you? Buyers are in charge and they're going to move into the next line of resistance. You don't need moving averages. You don't need super trends. You don't need anything. If you just focus on the candlesticks, they're going to tell you all the information you need. All of it. It will tell you, for instance, this is my last thing. I said that 2 things ago, but here we go. All right, so here's our 30-minute open for 9 o'clock this morning. All right, 9 o'clock gives us this big fancy range. This is the follow-up candlestick. So you know the low of this follow-up candlestick is going to be support, right? That's the first thing you do. You're going to draw a line right there, right? And then you're going to go, all right, I'm going to go long because I'm above this big volume candle, and I know I've got these candles in the past, so recent past predicts near-term future. And so I know I should at least get to the top of this wick. So I can take the trade from 78 up to 83. Some of these wicks over here, 83, 82. And that's your trade, right? Because you know, now we're inside of this 30-minute candlestick formation. So feels pretty likely that we're going to try and get down into the 64.74, 64.72 formation. But it could easily just as well bounce. If you take the trade there, your brain should go, okay, what if I'm wrong? Am I prepared to handle the risk event? If I'm right and it goes into target, what did I learn from getting involved in the fray? Post-trade analysis is incredibly important because if you don't learn what you practiced in practice, you're going to get onto the field and you're going to make mistakes over and over and over again. And luckily, our sim is nothing but practice over and over and over again. The problem is, what I notice, a lot of us are just not learning the lessons. We're getting charged for the lessons, but we're not learning them. So that's it for tonight. Curious buyers. I like how you said you use as little indicators as possible. What do you say to people who use them? Listen, this is a very personal game. A lot of people like indicators. You've got to find what works for you. I can give you thoughts and ideas and suggestions, but this game is about you. And so the most important thing to do is say, how am I comfortable trading? What is going to give me the most opportunity to develop a process that I can work in and then refine to get better? So my thought is use as few indicators as possible. But if you like certain indicators and you say, hey, this works for me, I can't tell you, no, don't use that, because you know you better than I know you. The problem is we don't really spend a lot of time getting to know ourselves, right? We don't know what happens to us under duress. We don't anticipate how we're going to act, whether we seize up or bolt for the door or double down or just start clicking buttons and go on tilt. We don't know this about ourselves, and we have to discover that in order to keep the guardrails, because this is a business of managing risk. And right now, you can blow up an account and just hit reset. But when you're a person like me, who's been trading live accounts for decades, I don't have any reset buttons. I can't hit reset. So I have to go, what's as clean as possible for me to get involved in? What's the cleanest thing I can get involved in? Where's the least amount of risk I can take while going into this trade, and realizing that if it's not there for me, I am simply not going to take it, because I can't hit reset. I can't hit reset. All right. Okay. Thank you so much, player. I appreciate it. Thank you, guys. I feel like using an indicator and understanding there's no holy grail lets me focus on collecting objective data and having better information on risk and drawdown. Listen, that's what you're supposed to use, right? That's why you're supposed to use indicators. So if that's how you use it, I think that's great. Oh, you're so welcome, Coog, Aaron, all of you guys, Beth. Thanks so much for coming. I appreciate you, and I'll see everyone tomorrow for sure. We're going to hammer out some of this stuff. I've got some great stuff for us tomorrow. Really, really great stuff. All right. Hey, listen, thanks for coming. Thanks for watching. And I appreciate each of you. And you know what? Dakota's coming up. It's going to be good, as it always is. All right. Take care, everybody. I'll see you on the streams.